We're back again. I do realize that I've been gone for a while, maybe even like a month or so. And if you see behind me, you realize the background is all different and such. That's because I've moved into uni and I've been I've been, you know, getting my uni sorted straight, but today we're back in the charts again. I do have a trade for you guys. I'm gonna go over. Um, a big change that I've made is that I'm actually on a live account now, and I will be trading on a live from now on, albeit a standard cent and not an actual standard account, because standard cent offers lower lot sizes, and I will be treating this like a demo account, and I will be trading small positions with small capital and hopefully grow my money. So I've kind of fiddle around with the account for a bit, maybe 2 or 3 trades, and but that was me just trying to get all the lot sizes down, all of the risk management down, all the order execution down, because it actually is quite different from TradingView, because my broker offers only accounts on MetaTrader and not actually a TradingView terminal. So there's major differences in order execution in both of the, different terminals. Because, on TradingView, there's no, the way you enter your order is so much different. You can actually type out your risk management, and it automatically enters a suitable position size for you. But in MetaTrader, it's not like that, and that's why I had to get that right. So I won't be including those first few trades in my recap, because those were, as I said, just me fiddling around with all the, new shiny buttons I had in MT5. But I'm still using TradingView for my analysis, of course. MT5 has nothing on TradingView, and yeah. So back into the charts we go. Market never stops for nobody. As soon as we come in here, we see a big, big CPI drop. This is exactly why I'm not trading today. Why you or anyone listening shouldn't be trading today because of CPI. This is like a, how much is that? 300 pip drop. That's a lot of pips. 30 pips, I mean, not 300 pips. Anyways, that's a lot of money to be lost. And trading news is gambling. The trade I will be going over today is going to be on the 5 minute, as always. I took it yesterday. Market was calm yesterday. There was a French bank holiday for Bastille Day or something along the lines of that. They had military parades and such, but anyways, back into the charts. This is a position that I took. So I'm actually upping my risk to 3% because I'm actually trading with smaller capital, so I'm going to grow that. So yeah, traded the same time as always in the middle of London session, or actually at the end of London session, overlapping into New York. That's when I was trading. So if we take a look at the daily, determining the daily bias for yesterday was pretty easy. We had, you know, it was rising for days, the trend, the bias was bullish for days. It was, and when I say for days, it was bullish for days. Look, these are all the times I've been traded, and it was bullish. However, yesterday we had a break of structure. I'm gonna mark it out. We had a break of structure there, so that just made our whole bias bearish. So keep in mind, we have a market that's showing bears in the daily, so it wants to go to the downside, scale back down to the 4-hour. We see a break of structure as well, which is just an expansion of the break of structure on the daily, so that is bearish as well. And break of structure here, break of structure here, daily. Yep. Further break of structures. Yeah, and there was no break to the upside, so the market was still in bearish. Now the market's really gone fucking bearish because of CPI. So we are really in a bear market now. And yeah, so that's the 4-hour. On the 2-hour, we saw actually a break of structure to the upside. So the 2-hour was bullish because there was a break of structure here. On the 1-hour, same thing as the 2-hour. We see a break of structure. Boom, boom, boom. So at this point, I see two high time frames that are agreeing with each other, which, I can confidently say that the market overall wants to go to the downside as it's in a bearish bias. But we have two lower time frames, the 1-hour and the 2-hour, that are in agreement with each other, but are in disagreement with the 4-hour and the daily, because they're saying, break of structure to the upside, we're going up. On the 30-minute, this is where I started to draw up my position, because on the 30-minute, we see right here, we see a break of structure to the downside. And that's one of the signs that gave me confirmation that started to give me confirmation, I should say, that the market might be reversing to the downside. So at this point, I was looking for more confirmation, liquidity sweep, break of structure, so such and such, all the same things to confidently say that the market is reversing and we're going to the downside. So this is where I scale back down to the 5-minute. This is where I took my trade. So first of all, we see a break of structure here. Liquidity gets swept, price gets rejected. Right here, we see strong bearish momentum, and price breaks structure. Yeah, price broke structure there. I'm going to remove all these all these other lines because they're really a nuisance right about now. So we can clearly see that, that break of structure and the and yeah, that liquidity sweep. So up at the 30-minute, I'm trying to see, fair value gaps being filled, etc. And if I remember correctly, there was an FVG that was filled. Actually, this was the FVG that was filled. That actually doesn't really have anything to do with our trade, but it still serves as extra confirmation that the market is indeed in a bearish trend. That's basically it. So I basically went off that 30-minute break of structure, that 1 hour surge of liquidity, basically interpreting it as a reversal in the market, and entered right about here, using a one-to-one risk to reward, set my stop loss right above that high, accounting for bid-ask spreads and setting my take profit at that, predominant low. And price behaved exactly as I predicted. Really not much. There was a retracement that filled this fair value gap here, which I could have used to get a better risk to reward, but that's not part of my strategy now. I'm actually using one-to-one, so that really doesn't concern me. And yep, got filled. Really textbook trade. Nothing much to talk about. Not trading today, CPI. Not trading tomorrow, PPI. Trading maybe Thursday. There's unemployment claims or something. Probably waiting for 30 minutes after that news comes out to trade. And then Friday we have no news, so I'm trading Friday. So have two trading days left this week. Obviously not trading today because the market's fucked by CPI. But yeah, that's basically it. Gonna be more consistent with these recaps. Gonna keep pumping them out. Easy. Yeah. Consistency is key. Thank you very much, guys. Thank you very much. Thank you very, very much. Good luck on the shots.